changes as you change. And so it is specifically related to where you are in your business. It's funny, like everyone talks about scaling. Everyone talks just scale, scale, scale. It's like, what are you going to scale if you're making $500,000 a year? Like, what are you going to scale if you're making $250,000 a year in your business? You can't scale shit. Like, you can't hire shit, and you can't hire the people that are actually good. Like, you can't hire actually good people if you're making that amount of money.
Welcome to the Path to Passive podcast, where we talk about building wealth and empowering lifestyle through commercial real estate investing for tech professionals. I always wish that other tech professionals reaching financial freedom had documented their journey along the way, so I'm doing it for the rest of us. Join us as we explore stories, many failures, and lessons learned along the way. I hope you enjoy and subscribe. Right there in City Center. I live about 15 minutes north, near the domain, and it's everything is pretty much 15 20 minutes away from everything, so it's easy. You're in Pennsylvania, right?
I am. Yep, I'm in Pennsylvania.
Okay, cool. So you're
But like, I fly around a lot for, I'm a part of like mastermind groups, and I fly around a lot. I don't really fly a lot for my business. It's we're able to do it all pretty remotely, which is very cool.
Yeah.
We're going to be transitioning into larger development parcels. One of our goals is to be, not one of our goals, the goal is to be the largest developer of single family home lots in America.
Love it.
And so, as a developer, not as a builder, which is sort of an important nuance, because you have your DR Hortons, your Pulte brothers, your Toll brothers that are the actual builders. And so there's that sort of between of the land owner and the builder. And that's the role that we want to play. There's a massive company called 4-Star Group that actually does that. And so 1 out of every 50 lots in America is developed by 4-Star Group. They have a market cap of $1.5 billion, and they're on the New York Stock Exchange. So they went public in 2007, 2008. And I think in 2017, DR Horton came in and bought the majority share of the company. So they own like 60, 70% of 4-Star Group. And so, that's really where we want to go. That's really the company that we want to build. And we want to bring it to, I don't know if IPO is really the move. I don't really know much about that yet. We're in the early stages, but our growth is going from the rural recreational market, which we really play in, which if you heard the Hive Mind podcast, you definitely heard me talk about that. But we're shifting gradually into targeting, more urban, suburban markets so that we can become a nationwide developer of single family home lots.
Cool. I didn't hear that was the goal, to be the developer of the single family home lots, but I love how you corrected yourself kind of immediately of we're trying to be, but we will be type of thing. You say it with a lot more conviction there too around, what the mission is. So bravo for that one. So we're here, we're already talking shop on this, and it's super cool. You just got from, sounds like a trip back from Austin. I heard one of your biggest, closers that was a big part of the company right now too is outside of Austin. It's great to have those people that really understand marketing, acquisitions to play a really critical role, right? Negotiation, etc. Honestly, I have to just put it out there. Congratulations right away. 100 deals, 2 years. You have a team of about, I guess, maybe coming up on 9 people. I don't know what you want to share about, the trip that you made out there in Austin, but you've got Landman newsletter, podcast, accelerator course, the community. Also, congratulations. Sounds like last year got married and maybe have an 11-month-old now as well. So you got a lot of irons in the fire, so to speak.
Dude, you're right. That's it. And it's interesting as entrepreneurs, especially in real estate investing, there's this sort of like asset jumping that a lot of people like to do, right? Because they're like, oh, it's all in a similar real estate business. It's like, no, man, it's not. Like, I own apartment buildings too, and it's a totally different business. There's a reason why I'm in land right now and not apartment buildings, right? Not that there's anything wrong with that. It just doesn't really sit with my sort of bent, like my an
Sure.
entrepreneurial DNA. And
Mhm.
so, yeah, we got a lot going on, but as I'm adding more people to the team, yeah, I find that I've consciously controlled the variables and the things that I'm going after. It's
Yeah.
difficult as an entrepreneur to do that, but I find that
Focus.
success, especially early on, if you're building a any type of business in the real estate sector, because we are really just marketers. We're marketers in
Yeah.
sales, right? We're building lead funnels at the
Mhm.
most core level. It's really sexy to go into a lot of different streams of marketing, but in reality, it's just important to manage one. And you might hear on a podcast, "Oh, I'm doing this marketing channel," or "This person's doing this marketing channel," and you got to really ask yourself, right? Is this person also selling leads from that marketing channel? Like,
Right.
is this guy getting on and talking about cold calling, and he also owns
Exactly.
a cold calling agency? Not to
Exactly.
say that's a bad thing, right? But like, you have to understand where's the information that you're getting that you're using for your business decisions. Where is it actually coming from?
Yeah. Couple nuggets in there. I know you're again just listening to, getting to know, a little bit about you already. You're a big proponent of 80/20, Richard Koch for sure. Being in the tech space, I've been in tech 10, 15 years, depending how you count. And a lot of my listeners, a lot of my peers, FANG and MANG companies, Meta, Apple, Netflix, Google, et cetera, et cetera, et cetera. I still hold my W 2 today as well, because I get to flex certain skills and build executive skills there too, in addition to this other stuff. But, we'll definitely get into a lot of those things. But you also talked about the differences. We'll call it comparisons just for clarity of land versus things like multifamily, et cetera. I've got a bunch of episodes listeners have already listened to, and if you haven't already, go check those out on multifamily, et cetera. But we're talking land here, and you know talking about that as compared to these other asset classes. Now, one of the things that you talked about was in a previous episode, or sorry, in a episode I listened to, is that you already had like 80-ish doors, all right, of smaller triplexes and stuff like that. Is that correct?
That's correct. Still own them.
Okay, you still own them. Okay, awesome. Okay, that that's interesting. So what was it then? What was the catalyst to really get into land?
Yeah,
Because
yeah,
there's
yeah,
a
yeah.
backstory here.
So, my roller coaster of feelings towards real estate is sort of like every entrepreneur journey. It's sort of like love hate relationship. Let me just say. So, I've badmouthed my rental properties many times. It's a love hate relationship, and right now we're in the cool phase. We're like I just took it out on a date, and we're feeling good, but there's a lot of reparations that are needed. And
Sure.
so, so we have sold some of our units,
Mhm.
and some of them are actively on the market, but like I still have the majority of our properties, and we might be even pulling some of them off the market. But so I think the way I think about each of these businesses is because as much as passive income, unless you're investing passively in a fund, like if you're going out and buying multifamily, it's a business. Even if
Right.
you have a 3 unit building, it's a business. And a lot of people say, oh, you can do it on 5 hours a week, right? And you can do it on 5 hours a week, right? Maybe, or maybe 10, even with
Mhm.
a smaller building. But there's a lot that comes with those 5 hours or 10 hours, right? There's a
Right.
lot of thinking, there's a lot of mental state space that is occupied if you're an active investor. Now, again, if you're a passive investor, it's a totally different ballgame, especially if you're a good operator that you're working with, because it really
Mhm.
becomes almost like the stock market, to be fair,
Right.
right? So disclosure, I've never invested in a fund, so I'm just speaking from experiences and experience of others. But that's the general feeling from the majority of the people with whom I've spoken about investing in funds. And so
Got it.
you know, you really have to look at the end result of what you're getting into, right? If you're investing in multifamily, like really you're in a people business, right? You're in the business of managing tenants, right? And maybe if you have investor capital, managing investor capital. Now you can hire
Hmm.
people that manage the tenants, but a lot of times they're not going to do it as well as you want them to do. A lot of times they overcharge you on fees. A lot of times the cash flow that you think that you're getting at the end of the month, based on your projections that are in a beautiful spreadsheet that's not based in reality, are not
Sure.
actually the cash flow that you're going to get, right? And so, the difference between land investing and, what if you're investing in, for example, self storage or multifamily, is it's actually like a true active business. So think about it as a pure sales and marketing business that, the building, if you will, right? The product
Hmm.
is not a 25 unit building that you can increase rents to maybe 20% higher than market
Sure.
value, right? But the value of that building is going to be stagnant after a period of value add, right? If you have a land flipping business, which is what I do, you can start from
Hmm.
literally nothing and then build an actual cash generating monster. It's like building an active business, right? You don't have that power to control your destiny. You can do one deal and it could be $100,000 deal or $150,000 deal. And if you buy a triplex, it's not going to be like that. You might get cash flow, right? But it's not going to be as much cash flow that you can actually control. So the real reason why I like land investing at its base is it is an iteration of the real estate investment process, but you really have control. It's an actual true business that you can influence through grit, through, like you were talking about earlier, like being a part of a tech company, like a really big tech company, like you have a set of skills that you can use and it can
Hmm.
actually influence the business month over month, right? Like you can't double your revenue in 1 month if you're investing in a 25 unit building, right? It takes a lot
Sure.
longer. And so that's the reason why I like land investing just from the real estate investment perspective. Now, if we're talking about from just a perspective related to how it sits as an asset class within the whole context of real estate investing, like
Right.
it's much less competitive because, frankly, the credit markets are a lot tighter. And so you don't have large investment houses like BlackRock, like Blackstone, Imagine Homes. I'm talking about the single family home space, or
Yep.
every investor and their mother investing in the asset class. There's still a lot of market asymmetry related to the information asymmetry between the owners of the properties and the market because there's so much subjectivity with the valuing of land. There's a lot of exit strategies, Steve. Like, you can develop it. You like we were talking about earlier. You can build on it.
Hmm.
You can lease it to a ground lease to like an Arby's. You can rent it out for hunting
Hmm.
land. You can rent it for farmland. You can classify it and put anything you
Sure.
want, like an industrial facility, a baseball park, a parking lot. There's so many different things that you can do. You can subdivide
Yep.
it. So your exit strategies are not this is a house, this is a house, this is a house. I can rent it out. I could flip it. I could hold on to it or owner finance it. You can do so much more with land. And so I really like that part of it. I can go on, but I'd love to stop if you have any additional questions. So
Yeah, there's a lot of creativity in there. So a couple pieces just to kind of rewind there for a moment. You really made the distinction and clarity around it being an active side, right? Not only is this. I'm glad you're here to really talk about. We're getting more into like business model as well because I think that's important. But you're also talking about being the active side. From a multifamily acquisitions perspective, you can only value add quote unquote so much, right? Is what you were talking about compared to something that is like land here, where you're going to have a higher transaction, or you can do more transactions, which is where you can turn that into quote unquote that business. And I agree, it's just as a frame of reference, not comparing you to this, but again for listeners, it's kind of like someone that's a broker, right, in real estate. If the high volume, that's how they'll make money there too. And so it's sort of one part. So you're treating this as the way to really get your quote unquote cash flow from it being trading land. And also, it sounds like you like the aspect personally of having many different opportunities for exit strategy too, whether that's, you know, I think you had mentioned a ballpark. You'd mentioned renting it out for, hunting ground, et cetera, et cetera. So, um, even that, there's niches for sure, right? Like if your thing is working with, other people to build a stadium or parking lots or whatever, those are niches too. But you talked about, I think even before we started recording, that your goal was to be the number one. What exactly was it? Tell me more about that.
Yeah, family home developer in single family home lot developer in the United States. Now, let me just take a couple of steps back, right? So it's
Sure.
important to understand the context from which I'm speaking currently. Like, I haven't done
Hmm.
that, and that's fun to talk about. Like, it's fun to talk about what your dreams are, but they're dreams and goals, right? Like, what I do currently is very different, right? So what I do currently is I have a business that acquires rural recreational land. So think about a major city, you live in Columbus, Ohio, right? Or
Hmm.
Boston, and you draw a line an hour and a half to 2.5 hours outside of that city. And there are markets that are attractive because there are a lot of velocity. They trade quickly. They're high dollar or high speed markets
Hmm.
that because people are trying to get out from the cities. There's suburbs out there. There's still development out there, but the activity in terms of the competition relative to the city is much lower. And so we try to. Our whole business model is finding these markets that are undervalued, misunderstood, and not targeted, and then use our sophisticated marketing machine to acquire off-market pieces of land and then sell them. Right. So we're using that same thing if we're going to connect that to the largest single family home lot developer in the United States. Well, it's really the same skill set, right? It's a marketing machine, but we got to start
Yep.
somewhere. And so the way that we're getting the cash, building the expertise, building the team is
Mhm.
through that model.
Got it. Finding the market and generating those leads there.
Exactly. And then
Okay.
acquiring these properties, and a lot of times we're acquiring them using investor funds and buying them
Hmm.
cash and then adding value to them similar to, when you go and you buy a house and you fix it up, you might put new flooring, paint, a couple of lights in, and then you sell it for a higher number and you really market that thing well. That's what we do to land. So we do a couple of things, very simple things to improve the value of the land. And like a standard deal for us is buy something for
Well,
50. Oh yeah, go ahead.
yeah. Before you get in that, let's walk through it. There's, I can think of maybe a handful of peers so far that really have heard about the model of land. We've talked, multifamily, we've talked self storage and stuff like that, which is, great that you're here for your niche. But talk to me about, so like a metro, you're an hour and a half away, somewhere along the lines of path to progress, right? Where things will be built eventually. So you said you're picking markets where they might be misunderstood. What does that mean?
Right. So imagine um, you own a piece of land in Brickell in Miami. I don't know if people know Brickell. Like, let's just say Upper East Side. There's a piece of dirt in
Sure.
the Upper East Side, right? Like everyone and their mother are going to know the value of that land, right? Because um, there's very limited supply, right? And so the supply of
Hmm.
the market really creates the lack of supply there. It creates a sophistication of buyers and sellers, right? Because it's very constrained, so everyone kind of knows what the value of this land is, right? And so,
Yeah, there's a lot of attention.
right, exactly. There's a lot of attention, and there's not a lot of supply in these markets that are outside of these major metro areas. On a relative basis, there's more supply. There's less attention. There's less sophistication, and there's no
Hmm.
development pressure as a general rule. And so we're seeing a lot of factors that make these markets sort of less attractive from an investment perspective because most people will say, and most people on this podcast will say, well, land is an illiquid asset. And so that's still in the cultural understanding of what land is. And so we come in
Sure.
as a liquidity event for a lot of these landowners that have owned these properties for 5, 10, 15 years. And we provide a solution. We say we can give you liquidity and you exchange liquidity for equity. And a lot of people want to
Yep.
make that exchange because we know these markets. We study them. We understand the product that's going to sell quickly. Because a 50
Hmm.
acre in some markets might not sell as well as a 25 acre or a 5 acre. And so we know that going into them. And so we know that there's a lot of demand for a 5 acre tract. So if we buy a 25 acre tract and cut it up into 5 acres, it's going to sell for a higher price and it's going to sell faster than if we just sell it for a 25 acre tract. And so, but most people don't know that, right? It's like most people don't know, as a general rule, the value of their house unless they have a realtor that tells
Sure.
them. But if you're in the Upper East Side, you're pretty much going to know the value of your condo, right? Because there's just
Sure.
more people talking about it, more sophistication, a more sophisticated buyer and seller profile. And so we go in these markets that there isn't that. And a lot of times these people, they bought it maybe 25 years ago or they inherited it.
Yep.
And so there's just not that understanding.
Got it. That's what you mean. Okay, I got you. So misunderstood is that people really don't understand their own valuations there. And when you were talking about how, as far as, maybe at least in this one case, I'm sure you have other, acquisition strategies, but in the one that you just talked about, going to educate, reaching out to sellers or even through the broker, like things are on market, talking to those sellers and coming in with cash and giving them equity positions, in English, like making them part of a potential upside for the deal, and then you go ahead and resell that. Is that about the gist?
So we don't give them an equity position. When I say we exchange liquidity for equity, that means they will take a
Okay,
lower price for a lower value, or
got it.
they'll take a lower price for a more convenient sale.
Yep.
It's like the analogy is like, have you ever been in a room on vacation and if you're in the States, you're like, I'm really looking for some ice cream, and you look at the ice cream, it's like $6, and you order from Uber Eats and it's like a $25 delivery fee, and you're like, I really want this ice cream, so I'm going to pay the delivery fee because it's going to manage my hassle and it's going to take care of everything.
Yeah.
and and so people are willing to do that. Like people are willing to do that in every single marketing sector, every single business sector. And so we offer that solution. We are the delivery of the ice cream, right? We deliver the ice cream, but it's a form of liquidity, right? And so they'll exchange that for the equity.
Got it. They'll pay for the convenience because they didn't have the other options, and it's kind of like like being at the airport. It's like you got so
That's
many.
right, man.
You
It's
got
like, dude,
there's
I'm not spending a $25 for a 6-inch lawn hot dog, but it's Yankee Stadium, so I'll do it.
Yep. Yep. No doubt. Okay, cool. I appreciate the clarification, what you meant there on misunderstood. Yeah, and misunderstood more that just the people, the sellers, and maybe other quote unquote professionals there don't really understand it either. But knowing how to read markets, study them, etc., is that expertise and really that service that you bring in too, right?
Right. Exactly. I mean, again, it's like the antique dealer that if you bring a trunk to him, he's going to give you $100, but he knows that he can sell it if he paints it this way or does a little bit of value add. He can sell it for $200 or $150. Like that's all we're doing, right? And so the core fundamentals of this are not complicated. And if you do
Hmm.
enough deals, you sort of get the base of it, and so you can
Yeah.
apply this to any market. And so the expertise is understanding how to build out a process to do this consistently, predictably, and reliably. And
Yeah.
that's what building a business is, right? So
Hmm.
that's what I talk about on social media, the landman, a newsletter, all that stuff.
Yeah, totally. I know you're a big proponent of the two things. I guess two, if there were 10 things, the 2 out of 10 there is choosing markets and having a good sales process, right?
That's right. That's exactly right.
Cool. So you also mentioned that you do some additional value add, right? So is are you talking about things like entitlements? And if so, entitlements, or something else. What are those things that you do before you sell?
Yeah, and excuse the cliche here, but people can't see the forest from the trees in any business they're in, right? I remember I bought my house, the house that I currently live in, and we got it for like $250,000 less than it actually was worth because the layout of the house was like totally messed up. And we knew that if we open up a wall and clean up a couple of things, we would be able to really make this space beautiful. And people don't know how to do
Hmm.
that in land either. Like you drive down the road and you just see trees and you're like,
Yeah.
where's the land start? Where's the land stop? Um, we help people visualize what it would look like to
Yeah.
buy the land through
Sure.
marketing, through professional photos, through cutting out home sites or building a little dirt path, through getting everything buyer ready, like a perk test or a well, doing basic things
Hmm.
that are not incredibly extensive or invasive to the actual property, but we do it and we give it to our buyers depending on the market, right? What the market actually wants. Like I talk about the subdividing, that's value add, right? That's giving the market what it
Yep.
wants. And we give the market what it wants, and the market then will handsomely give us, the value in return, right?
Yeah. So, question comes to mind on that because I actually don't know the answer as well. Do you find that many of the sellers, I'll just put the question out there. Do you find that many sellers are just not that sophisticated? And here's the context because, from multifamily perspective, just to keep it plain here, its value add is pretty straightforward, right? Go look at your comps. What else are you when the seller is getting ready to sell, they know that there are things that need to be improved, right? Like parking
Yeah.
lots, laundry, whatever, all that kind of stuff. And so there's quote unquote meat on the bone, as an example. And so what I'm asking this question of, do you find that there are, the land sellers are a little bit less sophisticated? It's like those things that you're doing, like you said, it's pretty clear if you already know the components, the nuts and bolts, and it's more of the art side versus the science side, because the science is, well, these are the strategies, these are tactics, right? And so that's how I mean by that question. Does that make sense?
It does, and I would say it depends on the market, right? It really just depends on, like, if you're getting land in parts of Beaufort County, South Carolina, which is where Hilton Head is. Like everyone knows what the property's worth. There's the less sophistication. I don't know if it's less or more sophistication.
Hmm.
There's a relationship, a direct relationship between the speed of the market, right? The competitiveness of the market and sophistication of the seller, like in any market, right?
Sure.
And so, really, what separates you as a investor in general is, how do I take this piece of land and find the highest and best use of it? That is
Yep.
that is value, right? And so, you can, for example, a standard deal that we do is maybe buy something for 50, sell it for $100,000. Buy it for 75, sell it for 150, sell it for 140, right? And so, we have very good spreads on our deals, and not everyone could do that, right? Because not everyone's going to think, I might have to take a deal and, for example, we bought a deal that we bought for about $45,000, and it was 6 acres, and basically the seller was asking a little bit below market value, 80% of market value. And with cost of capital, with closing costs, with realtor fees when we sell it, we're really breaking even, right? And the seller knew that. But I knew that we could cut it up and sell it as four 40,000 or three $40,000
Yep.
plots if we subdivided, if we prepped it, if we built out the home site. So we bought this thing for 45, sold it for 120, right? So, I mean, that's a really good payday. Anyone's going to be happy about that. Netting all fees, you're making maybe 60,000, right? Something like that, right? And so that's a really good deal. And we can do those deals all day, and we do those deals all day because we're creative enough to see, what does the market want to give us, and how do we find the highest and best use of these properties? So even if a seller is quote unquote sophisticated and they understand, Stephen, like this is market value, essentially, we can still look at the deal and say, well, maybe if we built this road behind it, like a quick road, cost me $2,000, I can add an extra $25,000 of value because the people in this area like these types of shapes of properties. All these things that you might, from an outsider's perspective looking in, say, oh, wow, that's really hard. It's really complicated. It's really not. It's just understanding a couple of the core things. It's like playing a guitar. Like once you understand the dexterity in your hands and how to do your left hand and your right hand, how to strum it well. I'm saying this like I know how to play the guitar. I'm learning now, so I don't really know how to play the guitar. So someone's in the audience listening right now and saying, "This guy has no idea what the hell he's talking about." But you get it. You
Keep
get
it
the
rolling. I
example,
got you.
right? And so that's the same exact thing. They're core tenets or core principles that we can apply for value add to take a deal that probably isn't a deal and make it into a deal that we're making money on.
Yeah, there's a key reminder that you're talking about, which really is a general principle, but having to map it here is, when market is hot, the transactions are quicker, then you do have to be more sophisticated. You can't wait for the X amount of time to act. You have to act quicker, which means you have to be able to be plugged into the channels. You have to know how to analyze faster. You have to have things ready, and you have to pull the trigger quicker too. Makes me think about a quote as you were talking there is, when experience meets money, or when money meets experience, experience gets the money and money gets the experience. And so, it's understanding what you need to do when and being able to act on it.
Right.
And uh, so let's sort of recap on the method, because method here, and really the process of what you do is part of the value of this episode, especially. So you go to markets, you work with that are quote unquote misunderstood, or where you really are able to bring your expertise, and where you're able to where your niche is that you're able to play in with the sellers. You see which strategies work for that piece of land, and you build you execute that exit strategy, because you need the exit strategy before you really acquire, right? So talk to me a little more about some of these different exit strategies as it's related to the mission that you have, right, to being the number one developer. So this is the main thing that you're doing, and have you cut off, like, made a decision over the next now or X amount of time to focus on nothing else but work with builders?
Yeah. So great question. And allow me to quickly summarize too what you just said to really crystallize it, because I think it was a good
Please.
summary that you had. So we find markets that have high velocities of sale, that are markets that have a good ratio between how quickly the market's moving and the competitiveness of the market. Usually that's an indication of the sophistication of the market, right? In terms of, we don't want to be in the Upper East Side, to give you an example, but we might want to be in an hour and a half out of Charlotte, North Carolina, right? In a rural market. We target those markets through a variety of marketing methods. We reach out to sellers. The sellers call in. We put them through a sales process. And then through that sales process, there's an underwriting process. And with the underwriting process, we see, hey, can we just offer this person cash? Is there a creative deal that we can do here in order to create the most value for our business, and then give them a fair offer so they're willing to and take it and work with us, right? And that's the core process. So that business is what keeps the lights on, right? That's the thing that we're doing currently, with the majority of our focus. I would say 90% of our focus, as we're building out this process to find markets for working with our builder partners. Now, we have a variety of builder relationships in a couple of markets in the South that within we work. And these deals are bigger, right? These are 7-8 figure paychecks for just one deal, and the timeline to close is 6 to 12 months. So you spin off this department, this part of your business, and in order for it to be solvent, it requires a period of time, and it requires one or two very large deals.
Yep.
So I don't believe in burning the ships. And so we're keeping our main business going, the rural recreational model, for a long period of time. And we will continue to have it in the back, just churning away. It's consistent, It's predictable, it's reliable, and it's highly profitable. And it allows us to take big swings at these larger deals. Now, when we have consistency, then I will say, yes, we're absolutely going to do this. When we can consistently get, probably 5 to 7 mil a year in profit from these deals, which we're a couple of deals away from that. Then that's when we would probably go fully into just strictly those markets. Like 4-Star Group made $324 million last year, top line. And so, you know, we're, we're very far off from that. We're very far off
Sure.
from that. So, but the transition is keep the main thing, the main
Exactly.
profit source, and then use that, parlay that that capital into building out the people to build out the other business.
Yeah, yeah. Always when you always are in two businesses: the business you're in, and the business that you need to be in or want to be in, right? And so, speaking of scaling, sounds like you're getting that way too from some different hires. Is that something you want to talk about here, or is that we
Yeah,
want to move past that one?
for sure. Um, y-
So specifically, the question is, tell me about when you were thinking about that additional growth, right? And you gave some goals. You gave some what other players are doing, but things that you have in mind, right? We have to model after people that are successful, right? And so, what is sort of the next phase of growth for you for your business?
yeah. So I view my role in the business currently as the chief revenue officer, marketing and sales, building out the processes, finding, training the people, and then coming in for large strategic decisions and closing large deals. And so
Nice.
the iteration of my business is getting into building out the consistent process to scale the marketing and
Hmm.
sales for the entitlement business, right? These larger lots. So as our main business is churning, the reason why, we talking out to even say I hired a director of operations is because this
Hmm.
guy, first of all, I'm not an operations guy. And so there's a lot of unique ability that I need to actually hire to put in so that we can really optimize our core processes, right? I don't want to just
Hmm.
scale out of this business if really the visibility that we have in this business is not complete enough to make strategic decisions related to investment into the new business.
Yeah.
So I hired the director of ops and built a really good compensation plan for him so that we're more profitable in my main business by having better tracking, better management of our SOPs, our KPIs, and our team members, so
Love
that
it.
we can bring more people on. And we have the conviction of this is an incredibly profitable core business. And so I can bring people on that have the experience of 30 years, 20 years in the entitlement business that really can come alongside us and help us build this business. I don't think of doing it alone. Really, I
Hmm.
understand that hiring the people to bringing them into this context and providing that context to them will enable us to scale and to get to that big number. It's not going to be me trying to learn everything I can learn
Right.
and like doing it in the timeline that we want to do it in. It's just impossible for me to do that.
Yeah, 100%. I'm picking up a few breadcrumbs here. You talked about unique ability. Have you read all the things or looked into things for Strategic Coach and Dan Sullivan?
So, a very big fan of 10x is easier than 2x, which is one of his
Yep.
newest books. I mean,
Hmm.
it like
Great
shifted
listen.
my perspective. Have you read it?
Yeah, I've read it a couple times, listened to it a couple times, different chapters. Absolutely.
Yeah, I mean it's incredible, and really thinking about becoming a part of Strategic Coach. But I'm not
Hmm.
not a member currently. Are you a member right now?
No, I'm not. I'm from other masterminds for apartments for raising capital.
Okay.
I've been for others and like operational excellence stuff too, like COO type of things, fractional stuff. But uh, no, I mean, I just like I love the idea of unique ability. It took me way too long to really get there. Like I knew what I was good at, but I didn't really have it cornered that good of what my unique ability was, and that definitely takes some time to think through and the space to put on paper and look at and like is that and so
How did you come up with
anyway.
it? Can you tell us about our process?
Sure. So uh let me think. So you know there was there's the quadrants of really getting down to the things that you like and things that you're good at, right? And you have to have some serious talk to to yourself of what are you actually good at and what do you really like. And for me, you know, I'm not haven't really been a like I've been a I don't really care if I enjoy this or not. I'm gonna get it done because it needs to get done kind of person. And so
Yeah.
it's like, do I enjoy this? It's like, I really had to do some soul searching for a bit there to think about, like, is this something that I really enjoy, or do I just like the results, or what? Right. And so that took a lot of time because I did engineering, I did, program management, I did, business development and so forth. And um, so it took a lot of time to really, speaking of things that are a cliche, like figure out what it is do I like. Okay. Okay. So Venn diagram of things I like, things I'm good at, and what's really in the middle, and then just sort of systematically knocking those things off. And if you have 10 things, just really go and look at, you know, remove 8 or 9 of those, you know. Uh and so it's kind of a choppy way to go through and talk about that now as I recall it, but I just that took a lot of effort to go through,
Yeah,
and it
I
sounds
agree.
simplistic.
And a lot of times, what's interesting about the unique ability is it changes as you change. And so
Sure.
it is specifically related to where you are in your business. It's funny, like everyone talks about scaling. Everyone talks just
Mm,
scale, scale, scale. It's like, what are you going to scale if you're making $500,000 a year? Like, what are you going to scale if you're making $250,000 a year in your business? You can't scale shit. Like, you can't hire
sure.
shit, and you can't hire the
Yeah.
people that are actually good. Like, you can't hire
Yeah.
actually good people if you're making that amount of money. So you gotta get to a level that is you should scale out of. And so you make that decision for what it is for you. But people, I think, want to get to their unique ability quickly, or even in 10x is easier in 2x. Dan Sullivan talks about having 150 free days. I'm like, that's a great
Sure.
idea, but right now in my business, I can't take that, right? And so there's a lot of stuff that needs to be contextualized, which is the same exact thing
Hmm.
with we're talking about land investing, we're talking about multifamily investing, we're talking about self storage. You have to really understand who you are, right? I have a program, the accelerator program, which is people who are interested in building this business, right? And
Hmm.
people want to come in and say, hey, I'm going to make $500,000 a year, right? In your landman accelerator, you did so well in your first year. I want to make that amount of money in or more, right, in your first year, three
Hmm.
quarters of $1 million, and they have W-2 jobs and they have 2 kids, and I'm like I love your ambition, man, but there are other priorities that you have to focus on. Like any business that even makes 50 to 100 to $150,000 a year in your first year is like a wild success, especially if
Yeah.
you're doing it for a side hustle. So a lot of the people
Yeah.
that we work with are, one of the guys is, I have a sauna business. I'm making 3.5, $4 million a year, and I want to build this extra business. Or I'm a W-2 guy, and he, a head of operations for North America for a certain company, and I want to add this to my passive income. It's not really passive income, but I
Sure.
want to spend
Portfolio.
5 to 15 hours a week. My portfolio, right? Diversify. And so, what's important though is when you get into those conversations, whatever asset class you're focusing on, you have to understand your unique ability, what do you bring to the table, and then be realistic about your timeline. And so,
Yes.
a lot of times, it's fun for you and me to sit on a podcast and say, "Well, this is the greatest asset class ever." I actually think land is the greatest asset class ever. But you might think multifamily is, right. And we can go to battle about it, but it's really about more of the perspective, the background of the
Yes.
person with whom
100%.
we're talking to, and that's important. That's what I talk about when in the accelerator. It's where are you coming from? What skills do you have? And you might not be the right person to actually get into this business. You might actually be a multifamily guy or gal. You
Hmm.
might actually be better fit for self storage, because if you're going to do a business, you might as well go all in. And it's easy to just pull the trigger, listen to a couple of podcasts, and say, "Oh, I want to get into this. I want to be." I'm listening to this guy on the podcast. He's making 50K, 75K a pop on these land deals. Shoot, I can do a deal a month and make $600,000. Well, maybe, but like, how good are
Yes.
you? What time do you have to put into it? There's a lot of stuff that goes into it that a lot of people don't talk about. And so,
Yeah. Absolutely.
yeah,
Yeah. There's a lot of skills that need to be stacked ahead of time, and that takes a substantial amount of effort. The thing that isn't talked about as much, we would talk about business model and this and that. It's important. and it comes back to, like you're saying, really kind of knowing yourself, what you're good at, but also being real, like I said too, of I think about it, from having ecology of your goals. Just keep it simple. It's just do the goals that you want really fit with the rest of your life priorities too. Just simple, right? And so if you're not willing to, you know, sacrifice your wife and kids or whatever for that thing, and leave in the middle of the night to go join the band you always wish you did, or whatever, then it's not ecological. But on the same token, uh, thinking about the process for your own unique ability, and really anything else, it's asking, those sets of questions, for what it is you want. I think asking yourself higher quality questions will get you to bigger outcomes as well. Because that's, again, we're kind of riffing here about the Dan Sullivan thing, but for anyone who doesn't know, it's, strategic coach is really about, you know, how to, we mentioned 10x is easier than 2x, is because it's about thinking about what the model is, right? And if you're trying to, as an example, run, a mile race, you have to think about how you can be successful in the 10-mile race, right? And if you're going for a 10, build the model for 100x, and yeah, your 10-mile race will be significantly easier. And that comes with different questions. What would I do if I only had, if I tried to do this with no money? Then, you could immediately go to, well, I would go see how I could use other people's money. But sometimes it takes, a lot of doing things to even get to that insight, like, I'm out of capital. What do I do now? you know?
Yeah, and
So,
that's a really helpful thought, especially related to, you said that I invest in your education, right? And you were talking about being a part of mastermind groups and operation groups. Sounds like you're sort of an operations bent and raising capital groups. You can download this data of someone that has been raising capital for 25 years in a very short period of time, provided they're the right person. They have the good. There's a lot of false gurus out there that are no longer in the business. They're just in the coaching business because it's highly
yep,
profitable. And so that's really important. But the education now is so ample. It's everywhere. And so asking the questions that we're talking about now, like, what are your actual goals? And then talking to people in self-storage, in multifamily, in land, and saying, if I want to pursue this path, should I be a passive investor? Should I be an active investor? And like,
100%.
dude, spend 20 hours learning about the business that you want to get in, instead of listening to one person on the podcast and saying, I want to pursue this now because this guy's talking about, making $50,000 a month in passive income, or this guy's
Yep.
making $75,000 a deal flipping land. Like, it's going to be the greenest pasture. It's like every business is difficult and it's not all easy. But if you just pursue one thing with reckless abandon with the right information, you will be successful. And so that's important to
And
really
don't quit.
consider. Exactly.
And don't quit. So that's one of the reasons why I kind of opened up today too, not just for a kind of run the mill, yeah, Clay, tell us about yourself, but I wanted to, to hear, what were some of the real challenges. You don't have to bare your soul in this, but I read a little bit about you before, is that facing a bankruptcy, looking toward a wedding, things like that. And you had to quote unquote make money, but you already had a number of doors, right? And so for many people, the story is that they're learning lessons from other people. They didn't have to go through their whole, bankruptcy and I lost my dog and, a Rocky story. It's like, no, I don't want to do all of that. So let me think about what my goals are now and like go after those, right? And so, um, you know, since we're on the topic, what are the pain points and challenges? How much time did it realistically take for you to learn real estate and get into to land? And I realize we only have a set number of time for today's episode. I'm cool to go over, but just it wasn't an easy road, right?
Well, would you like me to tell you my story about getting into multifamily, house flipping, or land?
go into real estate because you went there first,
Right.
right?
So I learned about real estate because I was listening to Bigger Pockets podcast, and they basically espoused it as the greatest thing since sliced bread.
Got it.
And it was true, right? It was there was cash flow was easy. You can get $100 a door or more. And this was
Hmm.
really before the wave of people got into real estate investing. Like Bigger Pockets podcast made it national,
Sure.
and then everyone got into it, right, including me, right? And so
Hmm.
you know, everyone talked about passive income, $10,000 a month of passive income. You can quit your job. What
Yep.
people don't talk about in that respect is, if you don't have a job and you only have this, so something breaks, then you have to pay for it out of your pocket, right? There's so many different variables, and I don't mean to be negative, guys. Like real estate investing has been a roller coaster, and it has set my wife up and myself for financial freedom in abundance at a young age. So I'm really happy about it. But when I got into real estate, I got into it like most people should, which is learning from someone else, right? Whether or not you take a course and have a W 2, like I'm sure you did, Stephen, or
Hmm.
you have a W 2 in real estate to learn the ropes. I went and joined a mom and pop guy, had a couple hundred units in my city, and learn from him. And I had a sales and marketing background. And so I learned everything I could about wholesaling and built a wholesaling and house flipping business. We did 75 deals in our first year. I mean, we crushed it, right? Because he had money and he was willing to make mistakes. And I didn't have to bear the responsibility of all the mistakes that I made, especially early on. He was forgiving, but I worked my ass off, right? You don't just do 75 house flips in your first year in wholesales if you're sitting on your ass, right?
No
And
way.
so I learned through trial by fire and on someone else's dime, and added a ton of value and a ton of net worth to this guy in a very short period of time. And then from there, I said, hey, man, this guy's making so much money. I want to get into real estate investing. So I bought a house hack, a 3-unit apartment building. Then I bought another 3-unit, then a 6-unit, then a single family home. And then I started raising money and short-term debt, and had a partner on quite a few deals, and went out and bought a ton of smaller multifamily real estate. And then about a year and a half later, I started to realize that the cash flow from that real estate, it wasn't there. At the end of the
Yep.
month, we'd have a bunch of expenses, turnovers, and some really crappy property management companies. And all of a sudden, the promise of the promised land of cash flow was non-existent. And then the day
Hmm.
before Thanksgiving, a couple of years ago, my wife got a call from her former boss, and she's no longer working. And he said, hey, we no longer have any investor capital. Um, the company's going under, and you're not getting paid for your last paychecks. And in a
Got it.
very short period of time, we were facing a wedding that I had to pay for because my parents couldn't pay for it, nor her parents. Our honeymoon, our life. We bought an Airbnb in Colorado in the Rocky Mountains that wasn't cash flowing because, again, we listened to Bigger Pockets podcast, and we wanted to buy an Airbnb. And we also wanted to eventually move there. So it was an emotional purchase too. So it was a shitty investment purchase.
Mm.
And so I had to make a lot of money quickly. So I was like, should I go back to W-2? Maybe not. I mean, I'd never really been a W-2. I worked for a family business before and then went to work for a real estate investor. So I was like, I got to make a lot of money quickly. And the only way I know how to do it is do it by myself. So I took a
Mhm.
couple of courses in land investing and left a lot to be desired, but I went full in. And I started sending out mail. I started building out the processes and
Yep.
doing sales and marketing, guerrilla marketing, and flipped my way to just barely making it, man. And that year, was one of the hardest years of my life, if not the hardest. I mean, literally, I can't tell you how many conversations I had with my wife about, this could be the week, right? This could be the month, right? And just slowly paying for my wedding, because we had this wedding that we were going to go in Spain, and we were going to pay for it,
Mm.
and we didn't want to disappoint our family members that already paid for the plane tickets. I mean, everything, that could have gone wrong, the pressure, and we wanted to be the people that, from an ego perspective, like, we could do this, we could pay for the wedding, we did it all, right? And it
Yep.
felt good when we did it, but it was so stressful. And it's another lesson I really learned. Can't really go back, but getting into a business, particularly land investing, that's cyclical, a lot of profit, but 1 month you're making 250 grand, the next month you're making 25 grand. That's not
Yep.
easy to stomach, right? And so especially early on, it's good to have a W-2 to be able to
Hmm.
buttress the cyclical nature of a lot of these real estate investing businesses. And so I got into land investing and scaled from there. And now we have a successful team. They're running the business while I'm building out processes, raising investor capital, building out the Landman Accelerator course, uh, content, and really giving back to the land investing world, and building a media machine for land investing in general, for my business, for investors coming in to invest and getting really great returns with investing in land alongside us, and then also the program for helping people get in and build a business like I built.
I love it. Thank you for going through all of that, really, because that's what it takes. So, um, thanks for sharing your life story. I think those you got to hear the things where it was the worst year of your life kind of thing. That really brings it to the listener, and makes it real because it is real. That's our lives. It's not just us talking. Um,
Yeah,
Anyways,
yeah. I
man.
saw this quote. I saw this quote on Instagram from a friend of mine that says 4% of businesses make over $1 million a year. So that means
Yeah,
that everyone that you see on Instagram, they all make over $1 million. It's a play on words,
yeah,
right? Like, no way all the people on Instagram that you say are talking about making $1 million have the life that they have. In
100%.
reality, it's so much harder than you think it is. It takes so much longer. And the reason why I say that's the toughest year of my life is because it really was 80, 90-hour work weeks, like every single week, like working every
Easy.
single day for months. Not like barely sleeping, anxiety. I mean, I can't tell you how difficult it was for my mental health, for my relationship. It was brutal, man. And people don't talk about that, how difficult it is, the crushing amount of doubt, imposter syndrome
Yep.
that you have. And that's why I always tell people, that are interested in getting into land investing, joining the accelerator, like, dude, have another form of income. This is a great way to produce a ton of money quickly, but you got to be able to hang on for 4 to 5 to 6 months before it really starts to kick.
And knowing that it's not going to be easy. I think the expectations too of things like, I'm going to put this dollar into marketing and whatever, and do that a couple times, and you're going to get these leads and whatever. Like there is a process, but there is lag time, just like you were talking about from the business you're in, the business you want to be. And that takes, 0 to 1 getting started. I mean, there's a lot of skill stacking there too. Look, man, we could talk a lot more about this. Again, I really appreciate you getting real on that, because shit's real. So,
Yeah.
but on the exit here, I had a lot of other questions for you, because this really highlights being into, as cheesy as it sounds, the quote unquote personal development stuff, but it was really more from the perspective of what has kept you going. But let's get past that. Talk to me about how this is for tech professionals. They're accredited, they're 2 3 4 5 100K for the year, and they are looking to make investments. So who is the investor that you like to work with? How does that look like, and then where should they find you to continue that conversation?
Right. So, thank you, by the way. I appreciate the opportunity, and I think it's a very attractive opportunity to invest with us, or build out a land investing business, man. Like, having that predictable, consistent revenue coming through the door is exciting. And for a lot of people that have the background in tech, I mean, you can take other people's lunch money, right? Because you really know the competitive nature, the hardworking, how difficult it is to really build out processes and build a
Hmm.
great enterprise. Because a lot of you are entrenched in great enterprises, right? So, you know,
Yep.
our ideal investor is a lot of people, right? If someone who wants to invest over 50,000, really, it's not anything below that, and then wants to
Hmm.
diversify in the land and get consistent checks, is someone that really is the type of investor that we're looking to connect with. So I'm on Twitter, LinkedIn, Instagram, all your social channels, and so you can
Yep.
easily reach out to me if you have interest about building out a land business, right? A 6-figure land investing business in a year. You can go to land-man.io. That's the website that you can submit an application on. This is an application-based program, right? We don't just accept anyone. We accept about 7% of the people that apply, because the majority of the people, I have a business, right, that does well, and so the reason why I'm doing this is there's a really long-term plan here, and so I just don't accept anyone off the street, because I give a lot of personalized attention, and so we have a limited cohort of people every month, just a couple of people that we actually even extend the invitation. So you have to fill out an application, and so we just don't take people's money. We want to make sure that they're the right fit for the group, so it enhances everyone else that's a part of the group, and it's just not another person and not another number. So
Got
if
it.
you're
Is
interested,
that for active the building the business and
that's
for
active. That's
limited
active.
partners?
Yep, that's active.
And then for limited partners,
You can just reach out to me on social media, DM me, and we could talk land.
got it. We'll make sure all those links and the socials are in the show notes. Please go ahead and have a look there as well. Awesome. Any last words for us, Clay?
Yeah, man. Do you have one or two last questions? I can go a little bit longer here.
Sure. So kind of rapid fire. Oh man. So off top of my head, because I had a few. Let me pick here. Uh, where do you we talked Dan Sullivan. Who are some other people that kind of that inspire you to that and ways that you feed your mind?
I mean, Alex Hormozy, right? Like
Dude,
the
he's the
guy.
boss.
I mean, he's a baller. He's a baller. So I really like Alex Hormozy. I really like to follow him.
Yeah,
I mean, he is so good. You don't really need to follow anyone else, right? Dan Martell, I like Dan Martell a lot as well.
buy back your time. Yep.
And buy back your time guy. And
Mm-hmm.
those are the people that I really follow. But I mean, I read a lot, right? Like I read a lot of books. And so
Mm-hmm.
there are people that are always popping up. Like I just read a book, The Great CEO Within, which was written by Matt Mokery. He's a
Haven't heard of
Silicon
that one.
Valley executive coach.
Okay.
Coached some of the top entrepreneurs in Silicon Valley, and very, very, very good book. And so I'm constantly reading and trying to learn. But if we're just talking about like consuming content, Layla, Alex Hormozy, Dan Martell.
Sure.
I mean, what else do you need?
Yeah. Yeah. I've actually got the laptop on top of $100 million leads right now. I don't know how many times I just keep referencing this stuff. It's so good. Awesome. And then last question here. What do you wish you knew before you started?
I would say the thing I wish I knew before I started was the people aspect, right? We build the people who build the companies. If we're building a company, it's about assembling a group of people. You don't have to do
Mm-hmm.
it yourself, man. And a lot of people want to do it themselves. Now, at the beginning, you don't really have the capital to do that, right? But as soon as you have a little bit of capital, man, don't go out and
Leverage.
buy something. Don't go buy a mastermind at the beginning. Invest in people, and you will be surprised the return. There's no bigger return than investing in the right people.
Did it take? Were you more of the strategy of go, and did it take a shift for you to think about leadership and development too? Was that like a big aha moment?
Absolutely. I think that our culture is rooted in the individual pursuit of
Sure. Yep.
everything. And it's really cool and sexy, but breakthroughs happen through collaboration. And a lot of times we are fed the collaboration happens by investing in my course or my mastermind, right?
Right.
I have a program, so right. But the reality is that true collaboration happens at the mode of the most amount of connection, which often is with your team members And so I would say that that was the breakthrough. I just hired someone that I think is going to be a massive difference maker and take us to the next level. 10x often is not anything more than finding the right people to sit on the right seats on the bus.
There you go. I think we're going to close with that one, Clay. I think we're going to close with that one. So thank you for being on. Thanks for sharing your expertise, group, course, etc. Go and follow up with Clay. Reach out to him. If this is something on the active side you're interested in, go and get some more information. If it's on the passive side, go and get some more information. All of my tech professionals listening, we all know the grind, working the 60, 70, 80 hours per week while we're juggling the other stuff too. And there is lots of skill stacking that has to happen, and it doesn't happen overnight, but set the goals, check for ecology, and get to it. Awesome. Thanks, Clay.
Thanks for joining us on another episode of Path to Passive. We love connecting with our listeners and those on the path to architecting their wealth and improving their lives. Feel free to let us know what topics you'd like to see in future episodes. Get in touch with us through email or Instagram. See you next week for a new episode.